Hey guys, Mike here. So, oh boy, whoo, what a day in the market it was, and oh lordy. I mean, you might have noticed a little turn there around 1 o'clock where you got a huge push down. Of course, small caps, well, they were just crushing the get-go pretty much. No love there as usual. And, I'll say this, and I just did a members video saying this, I never thought these words would come out my mouth, but from now on in, for this channel, at least for the time being, I will be monitoring bond auctions. And I know most of you are going, what in the world is he talking about? And I'll tell you all about that, okay? Because, you might have noticed something happened at 1 o'clock in the market here when it comes to the Qs, right? Because tech was holding us up all day long. The SPY, S&P was going down. The QQQ or the NASDAQ was much stronger, right? Because of the Magnificent Seven riding to the rescue as usual. I don't know if you noticed Apple, that beast it was this morning, and Amazon and Nvidia and stuff like that. But, we had CPI come out. And you're thinking, okay, it came in hot, right? And we'll get into that. And you think, oh, this is it. Yields are going to spike. So watch the yields, watch the dollar. And you saw a little spike. Nothing major at the moment. When it dropped at 8:30, usually you get to see a big spike if the market's really going to react. And so I said, let's see if we, get something out of this. And boy, did we. And you can see right here, and you had it come in a little bit hot, nothing major, 3.7 versus 3.6 estimate or whatever. And you can see there's core right here and then headline. Well, core still heading down. Headline popped up a little bit there. And if we go and scroll over to month over month, we can see, when you compare this to the middle where from 2020 to 2022 it was skyrocketing, it is lower, right? We look to the left from 2017 to 2019, and we're still above that, of course, and, we're seeing it pop back up. But again, when oil starts spiking and things like this happen, the dollar spiking, this is going to happen. And so will it continue? That's going to be the big question. That's what we really got to, make our minds up on and stuff. And then, of course, what else do we have happen, which we didn't really talk about? Was you had jobless claims come out, which nobody talked about, and they came in kind of in line, But again, this is not what the Fed wants to see. When you see initial jobless claims continuing to head south, right, and they're raising these rates and holding these rates higher, and all these yields are going up. But again, they saw continuous jobless claims kind of take a U-turn and start to head back up. I think it's going to continue to go down, though, because, again, we'll have seasonality hiring going on for the holidays, right? And a lot of people are talking about how full-time jobs are kind of going away a lot and being replaced by part-time jobs, so the companies don't have to give health care and benefits and stuff because it is cheaper for them. So we'll keep an eye on this again. But what happened here, as far as like when the market goes down, is when you get huge spikes like this. And so when the market opened, the dollar just took off, right? And it starts heading towards this trend line right here, which will be resistance now. This is the ones that held since I think it was like July 17th when it was going this huge run up. So that will be resistance, and we'll talk a lot more about this in a second. But then you see the yield, of course, did the same thing. It started popping up, getting above that trend line, which was that channel top right there. So we'll see if it can hold that as support now and maybe continue higher, which of course is horrible for what? Who's reporting tomorrow? Banks, right? So we'll get to hear from them, see what they got to say. These are the bigger banks. They do a lot better with this stuff. The regional banks, that's a whole different mess, of course, because as we talked about, this puts a lot of pressure on the regional banks, smaller business stuff. And it's not even the fact they go up. It's the fact how fast they went up today, right? So when you get that real knee-jerk reaction, the markets go, see you later. We're going off. But the other thing was at 1 o'clock, if you look at your chart and you look at what I put in the video yesterday, and you look at, there was a 1 o'clock 30-year bond auction. And I guess it didn't go well, from what I can see. And the rates just did a quick spike. And when it did that, the markets panicked down big time, right? And again, I just did this members video, and what it talks about is, one of the key things is this deficit we keep running, right? Well, the Treasury has to keep issuing billions upon billions of dollars in different types of bonds, right? Because they got to fund this deficit, as they keep spending like drunken sailors up there. And so what does it do? It puts more pressure on bonds because the Fed isn't buying bonds. Other countries are probably selling them as well. And so what do they have to do to get people to buy it? They have to offer them a higher yield on this stuff. And so we're going to see how it plays out. But the problem is there's no end to this deficit, right? It just keeps expanding and expanding. And it's going to get worse because what else you got going on? the interest on the debt is unbelievably high and going up, right? And I mean, it's crazy. Matter of fact, I'll show you this chart right here. And this is the quarterly interest payments on the debt now. You see that right there? It looks like a meme stock chart. Yeah, that's just happened since they started raising rates. We went from like 580 billion to almost 950 billion dollars a quarter, and that's going to continue to go up. And so, and this goes back all the way back to the 70s, but you can see once 2020 hit, really like 2016, I guess, this thing started spiking, sold off a little bit, and then see you later. Started raising rates, right? And of course, what's this do? We go in the market here, energy and XOK, believe it or not, for the day were green, but everything else, I mean, it was bad, right? Really, really red. And when you look, now we're back to this cliffhanger again, right? We broke the neckline, came back down, sold below the neckline again, closed, can't fill that gap, 433-ish area, decent support right there. But again, some people were saying, oh yeah, I mean, depending on what the banks have to say and how earnings go, that, oh, maybe this head and shoulders does play out, right? I mean, that would be crazy. Let me know on the bottom what you think. I know a lot of people want one last push down, but just let me know what you think about that and stuff. And I mean, because you've seen earnings I put in the morning news brief weren't that bad at all. And then you got the Qs, in this wedge right here, and what happened? Came to the top, personally rejected, came back below the October trend line right here and closed below the trend line. As you can see, that's where it found resistance. They rejected like 3 different times in the last like 15 minutes of trading. They're trying to bust through it, and we joked about a V-shaped recovery in the Discord, and I thought I was going to get it, man. I kind of knew that was going to be a tough spot there, but you can see it was going to try for a V-shaped recovery, which was going to be insane and not surprising. But again, that's the October trend line, and so that's providing some resistance right now. The IWM I ain't talked about probably all week, have I? Well, it gave back pretty much the last 2 weeks of gains almost in one day. I mean, look at that red candle. Whoo, boy. Again, that head and shoulders, I mean, it's still playing out. I mean, 164-ish is your target, but that is a huge demand zone down here, right? When it gets down here, it has gotten bought up before. You just saw it last time, so we'll see if this continues. Now, as you got in yesterday's video, and this was not a clickbait thumbnail, well, CPI data tanked this, and that is the Tesla channel right there. Well, guess what? And before we continue, guys, please hit that like button there at the bottom. Give it a thumbs up. Helps people find the video. And if you like this kind of content, think about subscribing. I appreciate all you guys' support. It sure did tank it. Yep, fell out of this channel, so now I get to go ahead and say negate this channel now, but I'm going to go ahead and remove this top trend line. Go ahead and remove the old pattern right there. What I am going to do though is keep this trend line in place, because now that will serve as resistance. I'm just going to have 3 different lines of resistance here, because obviously we've had 3 rejections right here at the top. You can see some momentum slowing down right here. But again, I'm going to go ahead and put this over here. Boom. So good. We'll see if that comes back up. That will serve as resistance now. Also, you have 1, 2, 3, 4, 5 right here. That's where it stopped today. It wasn't an accident stop there. It was the 5th rejection today. So again, that's resistance. So again, we'll see where this goes from here. I mean, with earnings coming up, all this fun stuff, tomorrow's Friday the 13th, which, believe it or not, the market actually doesn't perform that bad on Friday the 13th. I think it's just having a lot to do with banks tomorrow. So we'll see if it's just taking a breather, consolidating or not, or we move down a little bit lower. So just pay attention to that. Now, Apple was a beast. I mean, it moved up, filled that gap. This thing, it was like the best performer in the morning, man. But what happened? Again, it's in this downtrending wedge, got to the top, got to also that resistance, so, and rejected. That's what happened. The market ends up rolling over when Apple did get rejected and started heading down. So that's one of the things that put pressure on it. But again, as this was going up, the Qs were going green, right? Because it's 8% of the Qs almost by itself. And so that was kind of crazy to see. But we'll have to see if we get rejected and continue to head back down towards the bottom trend line there. Now, Amazon was another one. It was a beast today. Started moving up right here into this gap. Almost filled it, but it ran to the 50-day, which was a brick wall right there. So it got rejected. So we hadn't quite filled this whole gap yet. So I'll move it up. There's a little bit of it left and everything. I'm going to keep this trend line in place for support. The 100 is beneath it now. So we'll take a look at that. And then I'm also got this one, as I told you, back from October's high right there. We got 2 projections off of it. We also got that double top right there. So you're looking around 140 and then 148 resistance if this continues to move up. I say if because obviously it's crazy times right now. AMD was another beast this morning. I mean, this thing started moving up and you're like, oh, dude, we're going to 115 in one day, right? But of course not. It still hadn't made it above that year-to-date high anchor VWAP right there. That is providing resistance. Again, with the 110-ish area is huge supplier for this. As you can see, another rejection in this area right here. But if it can bust through there, no doubt. People think this is going to the moon, and especially if NVIDIA goes up where people think it's going to go up, it'll absolutely drag AMD with it for sure. And you can see what I'm talking about. I mean, that's just, there's a lot of volume there, a lot of resistance. But if it gets above that, you look back over to the left, this thing can go. So just keep that in mind. Again, a lot of people are using this as a proxy to NVIDIA because they can't afford NVIDIA, especially when it comes to the options. They're just crazy for NVIDIA. Now, Alibaba, perfect technical rejection right there, and this downward wedge right here. So no shock there, and it gave up 3 or 4 days worth of gains. I guess China needs to go back to the drawing board and do some more stimulus. Now, Netflix, look for a technical bounce here, right? It's in this downward trending channel. We've got 1, 2, 3, 4. Is this going to be the 5th bounce? It is below the 200 moving average. Again, that trend line that's ascending upward, that is its resistance now. And you can see it's kind of in danger because it's falling into this volume gap. So this could drop down and fill that gap below. Just keep that in mind. Now, PayPal, I'll just put this on here because people ask about this. But this one right here, the question I have for you is, how long is this divergence with the RSI, maybe the longest I've ever seen, and PayPal going to last? You see it just keeps setting pretty much new lows, right? And that downward trending wedge right there. But you see the RSI going back to February 2022 is actually showing something different, right? And so put in the bottom what you think. Again, this one right here, I mean, you would think at some point in time it's going to get some love, and it keeps kind of holding 57-ish decently well. But, the square and all the rest of them, too, have been kind of punished right now. So let me know on the bottom what you think. Now, when it comes to any kind of economic data, there's really nothing like it was today, right? But it's Friday the 13th. You have a lot of Fed speakers, and a lot of Michigan consumer sentiment will come out at 10 o'clock after the bell opens. I can't imagine it's going to affect the market. Tomorrow's going to be all about, look at those yields, look at the dollar coming right out of the gates. If they're spiking, market's probably going down or flat. If they're going down, which after spiking up a day, they usually take a breather, then there's no bond auctions, I don't think, then, maybe we get a reprieve. But again, a lot of it's going to come off the bank earnings, and what you're going to be hearing about is how much are a lot of these banks putting back for defaults on credit cards, things of that nature. Also, they have all our financial data, so they know how much we have in savings. They know, what the financial landscape looks like. And then I don't know if we have any regionals reporting tomorrow or not, but you do really want to hear from them to see if they're hurting even more or not, and just what they're seeing in general. So more of the health of the economy kind of stuff, and we'll see how the market wants to accept it. And usually it's funny, Fridays are usually greener than Mondays because Monday's the weekend hangover. So put in the bottom what you think is going to happen tomorrow and stuff. Again, just look at the yields, look at the dollar. That's what's driving the markets up or down right now, these big moves and stuff. And so we'll see how it goes. So please hit that like and subscribe button, guys. Really appreciate it. All you guys who watch the videos and share the videos, you are the best. Appreciate all the members who sign up. I do enjoy our discussions in the Discord and everything like that. So have a good one, guys, and I'll see you tomorrow.